Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng has opened with cuts of 0.6% as well. In the Japanese index Nikkei, that's seen a sharper cut of almost 1%.
Equity transactions as well as derivative transactions, the brokerage charges have come as a relief.
The downside of that range is about 28,700 and the upside is what's on your screen.
A couple of indicators indicate that maybe, at least in the near term, we could see some bit of a relief either today, tomorrow or the next couple of trading sessions.
It is a lower start. It's becoming quite clear, but it's not sort of a washout by any stretch.
Health insurance is less about delivering healthcare than about managing fraud.
Acquisition doubles our addressable market now in power.
Everybody pays 6 bips. Then I think the institutional broking industry will not be very badly impacted.
Negative news for Sun Pharma, but how they basically respond to any kind of compliance issues will be critical to see.
The market's looking relatively better today than what it was yesterday, but then again, it's just the first couple of hours of trade. Let's see where we go from here.
A complete pivot towards AI. For the first time, the company quantified the AI revenue at $1.5 billion.
As of now, just about consolidating with a little bit of a green tick on the markets.
And that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Rima Tendulkar. With me is Nigel D'Souza. All in all, a sluggish day. At 2:30, as we begin the show, markets are flat. The Nifty is just a tad below the 25,800 mark. Mid-caps unchanged. The Nifty Bank just down 5 odd points. But it's the individual stock price action. I think a couple of them. One, get Meesho. Yesterday, locked in an upper circuit of about 20%. This morning, there was profit booking. And now look at the kind of buying that's emerged in Meesho in the last 1 hour of trade. Stock again is back at the highs. And the other one is Shriram Finance. There's been a sudden dip in the stock. Remember, the board meeting is tomorrow. The company has said the board meet is expected to be concluded by 12 o'clock. I think the press conference is scheduled for 12:30. And there you have it. It's been a big mover since the beginning of the year. The street is anticipating a deal with MUFG. But looks like some profit booking, maybe some nerves, maybe the contours of the deal, that will be crucial.
Well, that's right. And it's already seen quite a big run, Rima. I remember, it was 550 odd. Valuations are very, very cheap. Another stock is a 850 rupee stock. So in the last few months, it's already seen a big run. But as you mentioned, Meesho is one stock. The other one I'm looking at is Ecos Mobility. I think that was a newly listed IPO in the last 12 months or so. That as well has seen a bit of a spike up in the last few minutes. Let's get it up for you on the screen. And Gabrielle, that's the other stock. I think now it's up close to 20%. I'm not sure in terms of the news flow, but I recall the stock being up 10%. And now Gabrielle India, that's locked up in upper circuit, up 20%. You have some pending orders as well, on the buy side. So keep an eye out on that name. Some of them should come up for you on the screen. Gabrielle up 20%. Ecos India Mobility as well, up and about in today's trading session.
Okay, and sectorally, capital market index is the best performing sector. A lot of oil marketing, AMCs like HDFC, AMC doing well. Tomorrow is the ICICI Pru AMC listing. Today, there was a brokerage note from Aquarius, put the target price at 2,900. That's about a 30% upside. But generally, the relief that the TER the announcement that's coming from SEBI is not as bad as what was feared in October. That will blunt the impact, and stocks are seeing quite a bit of a relief rally. Not just HDFC, AMC, pull up the other AMC names and brokerages. And sectorally, the other one, which is resilient today, is IT. TCS, the AI pivot, Infosys, Tech Mahindra also moving up nearly 1%. And Accenture, remember, comes out with numbers later today. So that maybe is providing some optimism. Will they go ahead and revise the FY26 guidance, which is subdued currently at 2 to 5%? But let's also tell you what we've lined up for you on our show today. It's mixed moves across the indices. Markets are off the day's high. The Nifty is hovering just below 25,900. It's mixed across sector. Global-facing sectors, IT, metals leading the gains. Pharma downbeat on account of Sun Pharma, which is down 3%. Shares of capital market players rally as SEBI revises the expense ratio for mutual funds. All statutory levies will be excluded from the base expense ratio, which has been cut across schemes. Limits on brokerages for derivatives and cash trades, also by AMC, have been capped. Sun Pharma has been dragging the pharma index. It's the top nifty loser after the company's Baska facility receives an official action indicated from the US FDA. An impact analysis coming up on the show. And a couple of counters reacting to brokerage notes. Jefferies downgrades Hero MotoCorp to an underperform. Shares of consumer durables majors like Crompton flying high on the back of a bullish note from Motilal Oswal. All this and more coming up in the next 1 hour.
All right, how do you position yourself though in the final hour of trade? Mitesh Thakkar joins us on the show to help us out with him. No, actually, it's not Mitesh right now. Sorry, it's Nagraj Sethi from HDFC Securities who joins in. Hi, Nagraj. Good afternoon. Good to see you win. Nagraj, on the headline index, we're virtually unmoved. But from the lows, we did see a bit of a bounce, which is telling you that 25,700 mark is actually important. What the bulls are, holding on to is that the FI net short positioning has moved to 92%, and the PCR had moved to the lower end of the range. So currently, it's above that 0.8 mark. Your view on the index, is there a trade?
Good afternoon, Nigel. Yes, rightly said, market has been in a consolidation phase, minor weakness over the last few sessions, last 2-3 sessions. But to some extent, the decline is not in the face. The sharp decline was absent during this period of time, showing some kind of a choppy movement in the market at the lower levels, but some stock-specific correction was going on. I'm not expecting a bigger decline from here onwards. At the low level, 25,700 to 25,600 is likely to offer a strong support, and I'm expecting bounce from the lower levels. So at the higher level, 26,000, 26,050 is going to be the strong resistance on any bounce back from here onwards. At the same time, I have two stock ideas from the long side. First one is the M&M Finance. Chartically, M&M Finance has been a tremendous uptrend over the last few months. The higher tops and higher bottoms over the chart indicates that the stock was in a strong uptrend. After showing a consolidation, it has broken above the hurdle in today's session and currently trading higher. Currently trading around 364.50, 365. One can look to buy at this point of time. Immediate target would be around 385. One can place a stop loss at 372. Sorry, 352. And second one is from a metal side, Hindustan Copper. Hindustan Copper has been in a consolidation phase recently and witnessed sharp upside breakout in today's session from near the important support of 10-day EMA. Currently trading around 386, 386.50, 387. One can buy at this point of time. And upside target would be 408, and one can place a stop loss at 375.
Thank you. We'll come back to you, Nagraj. Those were some trades for the last hour. Let's get back to the big story. That is, SEBI has revised the expense ratio for mutual funds. Surabhi joins in with the details. Surabhi.
Well, thank you for that. Yes, finally, after 3 decades, the market regulator has overhauled mutual fund regulations. The last ones were in 1996, and now we are virtually in 2026. Now, what has happened? Basically, the total expense ratio has been unbundled, and a new concept called the base expense ratio has been introduced. Now, what does this really mean? Statutory levies and the brokerage fee that mutual funds pay to brokers for executing their trades, they are, away from the base expense ratio. So the new formula for TER, total expense ratio, is the base expense ratio plus the statutory levies or taxes, CTT, GST, etc., plus the brokerage charge. Now, there is a reduction in 2 of these parameters, the base expense ratio and the brokerage. So let's dive deeper and understand each of them individually. Because now taxes and levies are no longer part of the expense ratio, the expense ratio itself has to be lowered to factor in for it. And therefore, SEBI has gradually reduced the base expense ratio across schemes, close-ended funds, open-ended funds, equity funds, non-equity funds. But what's important to note here is that the reduction in the expense ratio is less onerous than what the market had feared earlier. And this is especially true for large-size funds, funds which have an AUM of more than 2,000 crores. In any case, the way the regulations have always been, expense ratios reduce as the size of the fund increases. But now for large funds, the good news is that the cut is not 15 basis points, as was being proposed in October. The cut is just about 10 basis points. So that's as far as the expense ratios is concerned, the base expense ratio. The other big part of this regulation is the brokerage fee. the amount that mutual funds are paying to stockbrokers to execute, whether they're derivative trades or their cash market trades. Now, here also there is good news for brokers, especially because the reduction is not as severe as what was being proposed in October. So at a net level, earlier, mutual funds could pay up to 8.59 basis points. Now that cap has been reduced to 6 basis points. It's still a hit for brokers, but it's not as bad as the 2 basis points that was being proposed in the old consultation paper. And for the derivative trades, this has been capped from 5 basis points to 2 basis points. In a nutshell, SEBI seems to have walked some sort of a middle ground. It has given large funds what it wanted, not a very severe reduction in the expense ratio. It has given brokers some relief by not reducing the brokerage fee too much, and it has definitely given investors plenty of delight, more transparency, and a complete understanding of what we are paying as expenses when it comes to our mutual funds.
Well put, Surbhi. Thanks a lot for explaining that to us. In fact, earlier today, we spoke to Sandeep Parekh, Managing Partner at FinSec Law Advisors, on the impact of these decisions. Let's listen in to what he had to say.
The regulator should not be getting into price fixation, right? It should do that only if competitive forces are not working. Let's say if there's a monopoly, if there's an oligopoly. So, from first principles, I'm not a big fan of setting caps on any products, not just financial products. The industry has certainly grown, so I think, if you look at it from that principle, certainly it's a good thing, but it will favor the large funds and disfavor the smaller funds. No, I think it will adversely impact both the funds and the brokers as well. And again, obviously mutual funds can't, even the large mutual funds can't hire the kind of analysts which many of the brokers have. You have people who spend their entire lives just looking at infrastructure or just looking at transport industries. If mutual funds start hiring those kind of specialists, they'd have a research team of 100 people. So clearly, there are efficiencies in a brokerage hiring a transport expert and then distributing that research to 45 or 50 mutual fund and many other institutional clients. It's much more efficient. It's more cost effective versus having 45 different transport experts in 45 different mutual funds.
All right, let's welcome Sudeep Bandyopadhyay, market expert who joins us on the show. Hi, Sudeep. Good afternoon. Good to see you in. What do you like from the capital market plays? This has clearly come, as a relief to the AMCs.
Absolutely correct. I think there was a lot of confusion and a lot of apprehension amongst the AMCs as to what's going to happen. But I think SEBI walking the middle path and the cuts not being as severe as was being envisaged is a big, big relief. Also, remember that there is an AMC listing going to happen very soon, and that should create a lot of excitement in this entire space. We do like ICICI Prudential, which is going to get listed, and we believe that this was a good issue. So somebody getting an allocation is definitely going to be lucky. As far as the listing gains are concerned, that's what we believe. If you are really looking at buying some of the other AMC stocks and all that at this stage, it may be worthwhile to wait and let prices settle down post the post-listing excitement of ICICI Prudential, and only then venture into this space. Fundamentally, we do like the AMC space from a long-term perspective.
Today on Nuvama in the brokerage cap, Citi has a buy rating. Their target price is at 10,175. I think that stock is up nearly 1.5%. They're saying the wealth management flows continue to remain strong. New product is scaling up. So they like the story here. But Sudeep, betting on ICICI Pru for some listing gains. Talking about listing gains and the move thereafter, Meesho, what does it tell you? Mangalam has been pointing out that very little float is available because most of the shares are locked in till I think 6th of January. So that explains why you are seeing exaggerated up moves. But this kind of an up move, and what is it symptomatic of? What is this kind of price action telling you about the market and the investor psyche?
Investors are definitely hungry for the stock, and that's exactly what we are getting seen reflected in the price. But I don't think this is a proper price which it should be traded at. You're absolutely right. There is a lock-in, and post the lock-in, I'm reasonably confident a lot of selling will come and price will settle at a different level. Look, I think the company is doing a lot of right things. They are completely focused on free cash flows, which is a very good thing to do for a startup which has just got listed. Yes, the company is still not profitable on the PBT, PAT level, but the focus on free cash flow is definitely music to the ears of the investors. And that's the reason why I think the investors are flocking to this counter. But having said that, the valuation at which it is now quoting is definitely very rich. And I will definitely not recommend buying in at this level. It's a good company, good business, great potential, but not at today's valuation. Let's things settle down. Maybe in mid-January we'll have a look. Post the locking and selling consequent upon release of lock-in is over.
Okay, all right. I wanted to view Sudeep on the pharma names. So Sun Pharma, that's the top loser following some regulatory action from the US FDA. Ekta joins us to help us out with a quick take on what's gone on there. Ekta?
Well, yes, Sun Pharma is in focus in today's trading session on the back of negative news with regards to their Basca facility, which has been classified by the US FDA as an official action indicated status, which basically means that there are compliance issues in that particular facility. Now, the plant was inspected from the 8th to the 19th of September 2025. The company has said that they continue to manufacture and supply approved products from this facility to the US as of now. Now, analysts say that Basca facility is probably one of the most important facilities for Sun when it comes to their new complex generics, and hence the probability to deliver a potential positive surprise in the generic business might be lower for Sun Pharma as of now, but the official action indicated status as of now does not change the forecast because analysts are not really pegging in a lot of complex generics in their forecast when it comes to approvals and sales from that particular segment. And hence, however, going forward, the approval timelines could change because of the compliance issues at the Basca facility. Now, remember that there are other facilities which are under the US FDA scanner, which Sun has. For example, the Halol facility, which has had an import alert since June 2022 and was classified as an official action indicated status post a June 2025 inspection. And they have the Mohali plant, which also has a consent decree or was sent a non-compliance letter in 2023. So yes, negative news for Sun Pharma, but how they basically respond to any kind of compliance issues will be critical to see in terms of what the complex generic pipeline could look like for the company going forward.
Sudeep, you want to comment on Sun Pharma?
Well, I think a little unfortunate, but obviously the market didn't like it and the prices are down. So I will be a little cautious here. I have been for quite some time maintaining that we should focus on purely domestic-focused pharma companies, and Mankind has been our favorite stock, and we continue to maintain that view.
On Oro Pharma also, I think there was some news where the US FDA inspected the facility between 8th and 17th of December, and they received Form 483 with 5 procedural observations. So procedural observations. Let's get Aurobindo Pharma stock up for you on your screen.
Okay, all right. Sudeep, I wanted one quick word with regard to BSE. That's one of the favorites, right? Valuation's expensive. 3,000 rupee stock became around 2,500, but there's nothing adverse that has come actually with regard to BSE. There is still some fear out there with regard to regulatory problems. What's your view on the name?
Well, if I'm a little aggressive, then I'm very, very positive on BSE. Somewhere NSE, Nigel, will get listed, and that NSE listing will happen on BSE. It definitely will become one of the very largely traded stock, and BSE will benefit because of this trading volume, which will get driven to BSE by default. So yes, beyond everything else, I think that will be a big positive for BSE going forward. And I will maintain my positive view. But remember, it's a very, very aggressive position. The PE multiples are at a level which is stratospheric. And at this level, the margin of error is very, very limited. If I have to pick up one exchange stock, I will still probably go for MCX. We know what's happening in gold and silver. We also know that new option contracts are getting introduced. And the scope for the upside in MCX even now is significantly higher.
Okay, let's pull up IndiGo Aviation. That's having a good Thursday. The IndiGo CEO, Peter Elbers, in a video said the worst is behind the company. The company has managed to restore most of the flight network to about 22,000 daily flights. Listen into that bite and then we'll get a sense of how to approach the stock.
Through the storm, we are finding our wings again. The worst is behind us. These last 2 weeks have been very challenging for all of us. As IndiGo employees, we stood tall and united, weathering the storm together with unwavering support for one another. Thank you to our pilots, cabin crew, airport staff, operations control, customer service, and all functions who supported. Your collective dedication is the backbone of IndiGo. On December 9th, I shared stabilization of IndiGo's operation. After that, we restored our network to 2,200 flights today. Given our scale and complexity, recovering such situation in short time is a testament to our teamwork and the strength of our operating principles. Now we focus on 3 things: resilience, root cause analysis, and rebuilding.
And the stock is slowly rebuilding. At the peak of the operational crisis, the stock had dropped to levels of 4,800, sub that. And today it's gone up by nearly 300 rupees, but far, far away from the recent peaks on that. Sudeep, for now it appears the worst is behind. Operationally, they're back on track, operating those 22,000 daily flights. But there will be that financial impact in terms of the penalties they may have to pay, the refunds on account of the lost revenue, loss of confidence in the airline. At this price, 5,100, what is the view?
Well, I will definitely stay away and recommend that. You're absolutely right about the financial impact in the the next couple of quarters. But structurally, I'm a little worried because I think this first week of December exposed the weakness in Indian aviation industry, the kind of monopolistic situation which had been created. I think the government will necessarily take action to ensure that we don't have a repeat of the situation, and the market share of IndiGo does come down over a period of time. Now, this has to be done from a government and DGCA point of view, which doesn't augur well from an IndiGo shareholder point of view and IndiGo valuation point of view. So if I'm an IndiGo shareholder, I think I'll be extremely careful because loss of market share and loss of our business is definitely not good news from a valuation point of view. And remember, we are not talking about very cheap valuation or reasonable valuation. The margin of error at this kind of valuation is very, very limited. So I will be very cautious on IndiGo.
Got it. All right, Sudeep, always good to hear your thoughts. Thanks a lot for joining in. Wishing you a good rest of the day and we catch up soon. For the timing, we slip in a short break. On the other side, Alok Agarwal of Alchemy Capital will be joining in. Welcome back. Well, some of those metal stocks actually are slipping a little bit in the last few minutes. We'll update you with regard to a downgrade that's come in from Nuvama on sale. But others, you have JSW Steel, Tata Steel, both of them have seen a bit of a downtick. In fact, if you put Nestle as well, that as well has seen some kind of a downtick in the last few minutes. These are all nifty constituents, so just highlighting a few of these names. But Hormuz joins us as always. He's going to put the spotlight on all the movers of this hour. Hormuz.
Well, HDFC AMC, start off with that because that has been the big talking point. The stock move is justifying the big talking point as well. 7% higher on the stock now, the biggest single day gain since June of last year. So it's taken 18 months for the stock to have a gain of this quantum. It snapped a 3-day losing streak today. Today's volumes nearly the highest in 2 months. 25 lakh shares have been traded on the stock already. 20-day average of 5 lakhs. So 5x its 20-day average. The stock has moved above its 50-day MA of 2707 and it's made a double bottom of sorts at around its 200-day moving average of around 2550, and the stock is up 30% so far. It's turning out to be the third straight year of positive returns for HDFC AMC. A news flow driven move on Antony Waste. The stock is up 19% as of now. At one point was up 19%, was up around 17 right now. The biggest single day gain since May of 22. Volumes are the highest since September of 21. We have had more than 1 crore shares that have been traded traded on Anthony Waste, the 20-day average is less than 50,000 shares. So gaining on very, very substantial volumes. The stock has moved above its 50 DMA. Now the 100 DMA comes up at 525. So that's the first important level to watch on the upside. But the stock is still down around 40% from its July 2024 peak, which is well in excess of 900 rupees. Gabriel India is seeing its biggest single day gain in the last 5 months. We've had close to 50 lakh shares that have been traded on Gabriel India. The 20-day average is around 3.5 lakh shares. So yet another stock gaining on very substantial volumes in this 17% up move. It's taken support at its 200-day moving average and has seen a rebound from there. The 50-day moving average is now at 1138. So that's the next level to watch on the upside for the stock, which has had a pretty good year so far. More than doubled in value, almost 2.5x now. And it's having the best calendar year since 2014. And lastly, on the downside, Vishnu Prakash Punglia, we've been speaking about this over the last couple of weeks now. The third straight day of losses, and in the last 25 sessions, the stock has gained in only 4 of them, including one on Monday. And this has been the second highest volumes that the stock has seen this week so far. And with over 50 lakh shares that have been traded, the 20-day average is just around 8 lakh shares. So falling on volumes that are 6x its 20-day average, and it has remained below all of its key moving averages since the month of July. The December 2024 peak was 345 rupees. The stock is down 80% from those levels, and including a 33% drop from its IPO price of 99 rupees as well.
Thank you very much for that. Alok Agarwal, Head of Quant and Fund Manager at Alchemy Capital Management, is now joining in. Alok, markets may be sluggish, but there is optimism in the air as we turn into the new calendar year. The 2026 is going to be better for the Indian markets, with earnings growth picking up to, like mid-teens kind of a revenue growth. Plus that US-India trade deal, whenever it happens, will be the upside kicker. A lot of things are falling in place from a macro front. And I remember our last conversation where you said you're positioning for growth irrespective of the deal. So tell us, in the last 1-2 months, what have been the big changes that you've made to your portfolio? What are you very bullish on?
Yeah, hi, good afternoon. Yeah, as you rightly pointed out, while the markets are sluggish, there are a lot of positives to concentrate on. A lot of policy level decisions also have been quite pro-growth, especially on the RBI side, who has been there to push the liquidity as well as keeping the rates as well as CRR low. Yes, a couple of things were a little disappointing the last few months. The outcome of the GST, the first full month, for the October month, the collections were a little underwhelming. Possibly we'll look out for the next few months to watch out whether the activity is picking up or not. At the same time, the disappointing number was on the capex side for the month of October, as a result of which we are seeing some of the industrials and some of the beneficiaries of those capex are selling off in the last couple of months. But the focus of the government continues to be on the manufacturing side and ensuring that they do not loosen up too much on the fiscal deficit as well. So we do think that a risk reward is changing positively in India's favor. And the valuation gap that India had versus the emerging economies and the global economy, due to the underperformance of this 1 year, that has also got corrected to a large extent. So we enter 2026 with a more positive expectations. But yes, as we had said last time as well, the focus is more on those names that are likely to fetch higher double-digit growth rather than those which are sluggish on the growth side.
Hi, Alok. Good to see you. And I think you're a little contra, right? You're expecting mid-caps and small caps to actually outperform as earning momentum gains pace?
Yeah, in fact, it's quite intriguing to note that this year, while Nifty was up close to 9-10%, the average return of the top 750 names is close to -5%. So that has been the broad divergence in the markets. But if you look at the earnings growth trajectory as well, the Nifty 50 earnings growth for last 6 quarters has been in single digits. So the best performing index actually had quite underwhelming earnings growth for 6 straight quarters. So either the earnings growth needs to pull up or the outperformance may come from the broader markets. So we do think more than the market cap side, it is more on the sectoral side or on the specific companies or themes which are likely to deliver the higher growth. They could possibly be in the broader markets.
Tell us about a few themes that you're very, very bullish on. Maximum upside from here?
So the upside do we see on the consumer tech side. We do see on the financials, apart more on the smaller private banks, the PSU banks, and more importantly, the capital markets. And the global theme itself is pushing more towards the precious metals as well as the non-ferrous metals. The beneficiaries of these are the prime areas where the path of least resistance is of a higher double-digit growth, and that could actually result into outperformance of these sectors as well.
So consumer tech, smaller financials, PSU banks, in the commodity space, precious metals, non-ferrous. What else did I miss?
On the capital market side, the whole value chain, right from the exchanges to the brokers to the wealth managers and the asset managers, some of them are doing well today itself, but the story there is quite structural. In fact, one of the regulations being out today ensures that the path for the next few years, it's quite clear. And we're seeing that the huge amount of inflows that are coming in the form of SIPs. So these companies are growing. They're beneficiaries of the growing GDP of India, rising per capita income, and rising wealth concentration as well.
This consumer tech, are you referring to these new age tech companies, the likes of Meesho, Eternal, Swiggy? Because while the opportunity and the growth and the increase in penetration is undeniable, just the valuation, the rapid rise seems to suggest that a lot of it could be priced in. So at this juncture, to put in money?
I completely agree with you, Rima. Like, all of them are not possibly great investable names currently. What do we need to watch out for is who among them is actually gaining market share from the traditional side of businesses, those who are already turned profitable and the profits are improving. Because a number of these consumer tech companies are actually loss-making. So I'm not really too much on favor of companies which are loss-making. They need to turn the leaf, they need to be profitable and then grow and thereafter gain market share. So once these things are in place, which a lot of times we need to possibly wait out also to see who the emerging winner is. Some of them are already paving that path. Few companies on the payment side, few companies on the consumer tech on the beauty product side, and a couple of them on the food delivery side as well. So few of them are already ticking those boxes. Few others might have to wait out for some more time.
Okay, all right. I think cement was something as well that you liked, if I remember correctly. Cement as well as chemicals earlier this year. Do you still have a positive bias out there?
Cement would actually be more of a function of how the capex also picks up. So in case there is a sustained slowdown in the capex because of the overall reduction in the total tax revenue that we have had this year, in that case, we might find that the volumes are not growing as much as we would have expected to be. So our exposure increase that has happened in areas like precious metals and non-ferrous has also been to an extent at the expense of some of the other industrials, because we saw the capex coming down. Cement was also an area where we have reduced our overweight positions to a little more neutral position, as well as in chemicals. In chemicals as well, there was an up move that we saw in the last few months. And because the trade deal is still not very, very clear, we have cut out some of the overweight positions to a little more neutral position out there.
Okay, great conversation, Alok. Thank you very much for joining in. If it's not the last one before, maybe it's the last one before the close of this year. So wish you and your team a very happy new year. But love to have another conversation in 2025.
Wish you the same. Thank you.
Let's get into break. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. Also a few BTST calls from our experts. Welcome back. Absolutely unchanged on the Nifty. 30 minutes to go to wrap up trade. The Nifty is at 25,812. A theme which is playing out well are the CV makers. Tata Motors CV up nearly 4%, 400. Target price set by a few brokerages like BofA and JPM is 475, so more upside to go. And Ashok Leyland too is moving up. The key rationale being that after 3 years of sluggish growth, maybe the CV cycle is turning and EU truck market appears to be bottoming out. But other than that, other than these individual movers, at the index level, things are very, very flat. So let's find out what Nimesh has picked up from his dealing rooms and the chatter he's had. Nimesh?
Hi, Rima. So, well, the Nifty is flat. It's been extremely choppy and volatile as well in today's market. We've seen, 100 point or more than 100 point swing as well throughout the day. I think there is resistance clearly at the upper end, and there is a lot of selling in the broader markets as well. Even today, I understand the FIs, the net sellers in the cash markets expect a high number in terms of sell from the FI category. So that's from a flow perspective. The sector which has done well today is capital markets names. And I guess there is a bit of a relief rally there, a bit of short covering as well in the likes of HDFC, AMC. But in general, that entire pack has done well after that SEBI, final expense caps on both mutual funds as well as in brokerages. So a bit of a relief rally there. I guess IT will be in focus because of the Accenture numbers tonight. And of course, the big Shriram Finance deal is likely to get announced tomorrow. So the entire NBFC space as well can be in focus tomorrow. So those two sectors stands out. But I guess it's basically a broader market underperformance and selling from the FIs continue.
It's also the sensex weekly expiry today. And the mid-cap index, by the way, was absolutely flat when we started the show at 2:30. Now it's up nearly 0.5%, so spiking. What about stocks, Nimesh?
So the first stock on my list is Varun Beverages. That's been consolidating in a very narrow range of late, but I understand the city is anticipating some corporate development very soon. A potential acquisition is on the cards, is the buzz as far as Varun Beverages is concerned. Remember, they've already announced a foray into beer business via Carlsberg. So on similar lines, there could be further acquisitions as well. So that's the buzz as far as Varun Beverages is concerned. The second name is PFC. Again, stock has underperformed in the PSU basket, but looks like the selling pressure from a leading FI is largely over. So from a supply point of view, looks like that's largely done with. The third stock is Meesho. That's been a big outperformer this week. Been buzzing off late. Even today, the stock is recovered from the intraday lows. Essentially, on back of buy flows, I understand a leading family office and some large HN has been active buyers in the last couple of days, and hence we've seen a big up move there. And the last is Ashok Leyland. You spoke about both Tata Motors, CV, and Ashok Leyland doing good, but Ashok Leyland has been standing out in terms of very strong delivery-based buying for the last many days, and that stands out in today's trade as well, and hence a big up move in that name as well.
Do you want to give us some more information or teasers about Varun Beverages and what they're looking for in terms of an acquisition?
Well, Rima, as I said, they've already announced one big tie-up getting into the beer business through Carlsberg. I guess there is one not big, but there is one company which they might acquire to further get into the beer business. So that's something to track as far as Varun is concerned.
Yeah, recently the company had also amended its memorandum of association to include the business of manufacturing, producing and distributing various alcoholic products, including beer, wine, whiskey, gin, rum, vodka, both in India and internationally. That's thank you, Nimesh. Interesting list as always. Let's go across to Nigel now to get us the latest trends from the F&O space.
Well, Rima, if you look at it, we're in a bit of a range right now, and you just look at the action today, the writers are making the money because the 25,800 put well out there, the premium has dipped out there. The markets are more or less flattish. Even on the upside, the call writers as well making money because on the 25,900 call as well, the premium is down. So today's the day of writers. It seems the market's in a bit of a funk, in a bit of a range as well. On the downside, I mentioned this earlier today as well, 25,700 extremely important. You don't want that mark to get broken. And if you're looking at the range, 25,500, 25,700. On the upper end, 26,100 has got rejected. So that becomes the important mark to look at. The problem today is the Nifty Bank. Well, it's relatively outperformed, but it's not able to get past the 20 DMA. As in terms of the first level you wanted to get past is the 20 DMA. So I'll keep an eye out on that front. But with the shorts heavily in the system, at around 92% or thereabouts, the bulls are fancying their chances that if they can hold on, consolidate a little bit, then maybe in fact we would be bracing for a bit of a fight back. But we can't break the 25,500, 25,700 on the downside. Finally, in terms of stocks that we're looking at, Bandhan Bank, that's the one I've been highlighting for the last two trading sessions. The last time I checked, that's almost a sure shot coming out of the F&O ban. So I'll keep an eye out on that when the list comes later this evening. Bandhan Bank could probably be exiting the F&O ban.
Thank you for that list. Nagraj Shetty is back with us. Nagraj, any more trades?
Yes, Rima, markets have recovered a bit from the lower levels. And there are certain stocks which are showing really very well. Out of that, Ashok Leyland, chartically, it has been in a sharp uptrend over the last few weeks. No respite for bears in this case. Sideways range movement, and eventually the stock has witnessed a sharp breakout. Placed at the higher levels, looking very positive, and looks like though placed at the higher levels, there is no indication of any reversal building up at the highs. More upside could be there. 180 is going to be the next hurdle, next resistance to be watched for the stocks in the short term. Second one is the TCS. IT stocks have outperformed in today's session. In the last few sessions, they were in a consolidation phase. This stock has witnessed a breakout of a range movement around 3200 levels, 3210, and placed at the higher levels. There is a hurdle of around 200 EMA, somewhere around 3300. I'm expecting this to be taken on the upper side. So 3350 is going to be the resistance to be watched in the next near term.
Thank you very much for that. TCS started the day flat, but now has moved to the day's high, 2% up on TCS. One, the AI pivot, the details the company shared at the investor day, and two, maybe something anticipated from the Accenture earnings later today. But top honors once again goes to Meesho. Mangalam now joins in. Mangalam, put it in context, the kind of run-up that we've seen in the stock price.
Well, it's a big move that we've seen on Meesho. In fact, just as we speak, the stock is up nearly 10%. 6 continuous days of a big move that we've seen on Meesho. There are multiple reasons why the stock saw a rally as well. The first part, obviously, post-listing, there were a lot of institutions that did not get allocation in the anchor book. The issue was fairly well subscribed. So those guys went ahead and bought. Secondly, there were a couple of brokerage notes that came by as well. And third, most important, there was very limited float available for the counter. So as a result of which, the impact price or impact cost was a lot more. Just to put things into perspective, and these numbers change as we speak. The stock from its issue price has rallied a whopping 115%. And, we look at it post-listing as well. It listed at around 162, 162.5. If you look at it from there as well, the stock has seen a rally of nearly 45%. It's just 5 or 6 trading sessions. At IPO, the valuations were close to 5 times sales. Now it's moved all the way up to 11.5 times sales. The management has been speaking about generating and growing their free cash flow while improving contribution margins. But at some point, valuations will come to the fore because at the current market cap, upwards of 1 lakh crore, it's well above names like Jindal Steel, Indian Hotels, United Spirits, some companies like Havells and Dabur as well. For perspective, Meesho is a company that was founded just about 10 years ago and now has a market cap much above all these big listed companies too. But the other important thing to track is, again, like I said, it's limited float, right? As we speak, only 6% of the company's overall float is free for trade. The rest is all locked in by pre-IPO investors, by promoters, or by anchor investors. So the first real test of ample liquidity in the stock will happen only in 2026. On 6 Jan is when the anchor lock-in opens, and as a result of which we would see a bigger, liquidity or maybe a bigger depth in the stock as against what we're seeing right now. But as we speak, the moves on both up and downside are fairly exaggerated.
All right, Mangalam, thanks a lot for that. Limited float obviously playing a role out there. And, some have it fast, some take longer to get to that mark. But staying out there is the real challenge out there. So we'll keep an eye on Meesho. By the way, keep your eye on the bottom of your screen, Sammaan Capital. There's a clarification that's coming out there. They are distancing themselves from the erstwhile promoter. They're saying that they have no relation with Mr. Sameer Gehlot. They're saying that, in fact, he exited the company as a shareholder as well in September 2023. And also, he exited the board in March 2022. So after seeing a bit of a downtick on that, they're clarifying and they're distancing themselves from the erstwhile promoter. That explains why we're seeing a decent recovery in Sammaan Capital. Hopefully, we can get the management on the show and, in fact, get further clarity with regard to the deal, any kind of spoke, and whether or not the deal will go through. But for the timing, some clarification. The street likes it. Stock is recovered. Well, we have Mayuresh Joshi as well, who's joining in on the show. Hi, Mayuresh. Good to see you in. I think we have Mayuresh with us. Yes. All right. I think he's joining in. Hi, Mayuresh. Mayuresh, any view on Sammaan Capital? There is some bad news that's coming in there, but the management now has gone on record and they're clarifying that, all the question marks are being asked on the erstwhile promoter. So, they're distancing themselves away. And they're also saying that he's not only exited the board, he's also exited as a shareholder. Your quick take on it at around 144 rupees. This is the stock that was 185 rupees on the day they announced the deal.
Afternoon, Nigel. No, I think some positive statements coming through, which should give some element of respite for the stock itself. However, I think the streets still need some element of conviction to probably come through before a lot of investors probably jump in. Broader market still consolidating, not doing well. And therefore, I think some other bit of conviction, both through numbers and probably some other statements or some clarification from the regulator is something that will soothe the nerves for a fresh investor to get into Sammaan Capital. As our stands on NBFCs, our take is the higher rated NBFCs, leadership NBFCs, might actually continue doing well because they've got a plethora of parameters working for them. Better capital adequacy as an example, better asset liability management as an example, asset quality pressures are coming off, interest rates are coming off, which is a good sign in terms of their overall borrowing costs. And therefore, I think within NBFCs, the better run NBFCs, whether it's a Shriram Finance as an example, which also has lower exposure to personal loans, unsecured loans capped at 4%, probably makes the mark at our end.
Got it. All right. Mayuresh, I wanted your view on SAIL. That stock is in focus in today's trading session. And SAIL actually has seen a bit of a downtake. That's after Nuvama. They have come out with a downgrade note. They've changed the rating to reduce from hold, and also the target price they've cut to around 106 from 141 earlier. They believe that risk reward has turned unfavorable. So they've gone ahead, they've cut their EBITDA estimates for the next few years because they're factoring in lower steel prices, and though they're penciling in a 3,000 rupee price hike in Q4. So on the back of that, they are expecting pricing to be a little bit weakish in the time to come, not as much to go up, not as much, but in the Q4 they're expecting some kind of relief. Now, they're bracing for a weak showing in Q3 itself. They believe that the company will report a 30% quarter-on-quarter fall in the absolute EBITDA number. And on an EBITDA per ton basis, it could be down by around 1,400 sequentially to around 3,700 on a year-on-year basis. At current prices, they're saying the stock is not cheap, trading at close to around 7 times EV upon EBITDA. They go on to add that the company shall soon start capex on the 4.5 million ton ISCO expansion, which will only increase debt further from here on. And they point out that the return ratios, the ROEs, are extremely poor at around 3.2 to around 6.5 times odd. Put all this together, Nuvama believes risk reward has turned unfavorable. They're highlighting valuations, weak profitability, weak return ratios. What's your view, Mayuresh, on this particular name? SAIL is actually the metal stock that's underperforming today.
It is, Nigel. And again, I think as we see it on markets, it's trading 5% below the key pivot levels as we are observing this. But to a large extent, in terms of the points that the report is pointing out, I think two things. One, I think if you probably look at the pricing mechanism at this juncture, whether you're talking about HRC or CRC prices, obviously they have remained a tad bit under the pump for the past few quarters, but they're seeing signs of stability coming through. And therefore, I think how HRC, CRC prices play out in lieu of domestic demand expected to remain strong and stable is something to be watched out for. The second element in terms of the additional capex that will be required in terms of the subsidiary capacity addition that is expected to happen, I think that has already been penciled in terms of not just our estimates. I think a lot of analyst estimates would have penciled that in. And therefore, I think the reported EBITDA per ton should start seeing signs of stability as we head into the second half, in my opinion. Having said that, again, I think it still remains a little bit volatile in terms of global conditions and how pricing will probably play its part. Input costs have largely remained moderate as we speak. And therefore, I think an absolute and reported EBITDA should probably start normalizing as we head into the second half. Having said that, again, I think the view largely remaining neutral because I think there are a lot of conditions that remain beyond the control of the company. And therefore, I think our take is that one really needs to be very, very selective when it comes to the metals bank.
Thank you. Stay on. Need to get into a break. We'll come back and get you more on the markets closer to the wrap of today's trading session. Welcome back. We've got about 7 minutes to go. Looks like it's going to be a flat close, but mid-caps perked up towards the close of trade, though the advanced decline ratio is still negative. Two stocks advancing for three in the red. Mayuresh, all eyes on Shriram Finance. Board meet tomorrow. If we do get a deal around the current market price, is there still going to be upside left in this stock?
Afternoon, Rima. So as I just mentioned when you were discussing Sammaan Capital, I think the street is eyeing what is probably expected to happen as far as the deal contours are concerned, and that's largely getting priced in. But to a certain extent, if you probably play out the next few quarters, I think the worst in terms of reported numbers should be behind us. With a declining interest rate, I think the NIMs and spreads should largely start stabilizing for Shriram Finance. And as I said, if you probably look at the book structure itself, around 4.5% in terms of personal stroke credit card stroke unsecured loans, which largely means that it is a well laid out balance sheet as we speak. The borrowing mix is pretty well diversified as well. Capital adequacy for Shriram Finance remains extremely strong and robust. And therefore, I think the expectations in terms of asset quality pressures largely being behind us should largely start playing out in better return ratios as we head into the next few quarters. So our sense is that the rating rankings, the parameters that we see as per CanSlim at Markets for India, probably Shriram Finance ticks them all. So yeah, remain positive on this.
Positive on that. Give us one interesting mid-cap, small-cap idea.
So I think commercial vehicle makers are expected to do well. I think we've already seen a large part of the price move start playing out, whether it's Tata Motors CV, whether it's Ashok Leyland as an example. I think as an ancillary to the entire ecosystem, I think tire stocks have remained relatively consolidated over the last few weeks. JK Tires on declines, I think, seems to be a very, very interesting proposition as a proxy, not just to the CV play, but also the replacement market. If you probably look at the product mix itself, truck and bus radials are around 51% odd, passenger radials are around 31% odd, replacement is around 65% odd, OEMs is 21% odd. They're introducing a lot of ranges, whether it comes to commercial, whether it comes to the EV ecosystem, whether it comes to the passenger premium radial tires as well. And therefore, I think in terms of reported numbers, the expectations of margins being between 12 and 13% odd should probably become a consistent norm and improve going forward as well. And balance sheet looks relatively robust and strong. So I think any decline on JK Tire probably becomes a very, very interesting proposition.
What level to enter JK Tire? What's the extent of decline? It's 459 now.
Yeah, so as we see it in Markets with India, I think if it pulls back to the 50 DMA, as we track both fundamentals and technicals, I think 426, 430, I think will be a good level to start getting.
Okay, all right. What about the EMS stocks, Mayuresh? They saw a bit of a pullback after a sharp decline, and now they're consolidating a little bit. Anything you like from there?
So, Nigel, again, valuations still remain a concern out there. I think the point is not about volume growth. The volume growth will keep on coming through. They're adding new clients, whether it's Kane, whether it's Amber, whether it's Irma SGS. And therefore, I think with capacities that they already have and expectations of sweating of those capacities, volume stroke, product mix stroke, new client additions will keep on happening. I think the point in terms of a valuation re-rating will be how margins and the bottom line numbers probably grow. Margins will grow on two fronts. One, I think in terms of ODM, that is original design manufacturing component, actually starting to increase margins. And secondly, I think as operating leverage kicks in with better ODM performances, I think the bottom line growth and free cash flows will be far, far stronger. How and when that transition happens is somebody's guess. But in my opinion, at this point of time, fully pricing in at least the EPS growth that these companies are expected to report on an FY27 exit.
Okay, got it. Mayuresh, I'm not sure whether you mentioned, but on the alcohol companies, anything you like from there? Some of them have seen a sharp correction, the likes of Radico, Allied Blenders, Tilak Nagar, and now we hear that there could be some kind of move out there with regard to Varun Beverages as well. Your take?
So I think we've discussed Radico quite a few times over the last few months. I think we still continue holding that in our local and global portfolios. Our sense is that for the industry as a whole, premiumization is a trend which will continue and which will keep on driving price realizations in a substantial manner. In terms of the input cost itself, both the ENA, the extra neutral alcohol prices and glass prices remain a little bit stable. And therefore, I think EBITDA margins should probably see a decent performance as well as they explore newer markets. And as export markets also start picking up for a whole host of these players, including the likes of Radico, Allied Blenders, United Spirits, who are introducing newer products in the Indian markets. I think the ecosystem is expected to have the premiumization tag play out on numbers, margins, as well as bottom line. So I think remain optimistic on this space. Disclaimer, Radico is something we continue.
All right, Mayuresh, thanks a lot for joining in and giving us your thoughts. Well, time to wind down the markets. We go home almost unmoved on the Nifty itself. So we went in a broad range of close to around 200 points. But otherwise, the Nifty ends as flat as can be. The Nifty Bank as well almost unmoved in today's trading session. But it was heartening to see actually the mid-cap index was an outperformer. That went home with gains of around 0.3%. From the Nifty pack itself, IndiGo Aviation did well, was up close to 3%. TCS quantifying the AI exposure that we could possibly have. So that one, in fact, went home with gains. Tech on the whole actually did well. So tech has been actually started outperforming what the Nasdaq is doing because of talk of that AI bubble. So good to see. The IT index did pretty well. What didn't do well? Sun Pharma was under pressure. Ferrous stocks did come in for selling, whether it was Tata Steel that was down 1.5%, whether it was SAIL with regard to the downgrade that did come in from Nuvama. From the broader markets, a few stocks that moved on very, very large volumes. Favorable news flow coming in on Anthony Base. Stock goes up 20%. You had Walcher Nagar that was up more than 10%. Gabriel India as well at one point of time was up 20%. Goes on with a gain of more than 10%. Meesho can't be kept out of the action. That stock as well was up close to around 8% in today's trading session. And the AMC stocks did see a good bounce back. Cantor, Robeco, HDFC, AMC, all of them did pretty well. Well, on that note, we'll wrap up on this edition of Closing Bell. Don't go anywhere. The team of Markets Forward comes up next.